Hello everyone, welcome back to my channel. Previous days ago, I put up a video on dividend investing. Now I know the audio was kind of low due to me not wearing a mic, and you must have heard in the background the AC running, so it was kind of loud and over my voice. So hopefully this is a little bit better than the previous video. But basically what I was trying to explain to individuals who are interested in investing in dividend stock is that I have a substantial amount of experience investing. When I first started investing, I invested in individual stocks, companies like Facebook, Microsoft, Apple, Bank of America, Verizon, AT&T, Coca-Cola, those companies that are valued and are very, very popular here in America and have a high value rate. So I know about value when it comes to particular stocks, particular companies. But with me, my name in the game is to buy low and sell high, or buy low and hold for a long time. And just like I was saying before, the coronavirus hit, that a lot of these stocks that were out in the market were overpriced. But yet people constantly say to me that they're not concerned about the prices, they're just going to buy low and buy high. You don't have to necessarily do that. You can sit on your cash, and then when the stock goes down, that's when you can buy. You don't have to always buy high and low. You can just buy low, because as you see, the stock market goes up and it also goes down. So that's why it's always good to have some cash on the side when you have an opportunity to actually invest when there's a discount. Now, like I was saying earlier, I invested in individual stocks. Some of them had a dividend, but I noticed a lot of them, even though they had a payout of dividends, many of them were not paying enough in order to make a living off of. You would get like $4, maybe $8, maybe a month, maybe every 3 months or every year or something like that. And then some of the individual stocks had no dividends, so you will have to just wait until they go up, and many of them didn't go up as far enough in order to make a real decent income. Like, for example, I bought Facebook when it first came out, when it went for $40 a share, and I ended up selling it when it came up to about $160 something, which that's a good value, a good markup from what you bought it for. But I was just realizing that, you know what, even though I bought it at a reasonable price, but maybe I'll take that money and buy something that even more reasonable I can invest in, and also get paid for investing in that company. So when I started looking at the dividend stocks that I had, I noticed that they weren't paying enough. Like I said, they were giving like $4, $7, $8, maybe $15, and I was just looking for a little bit more than that. So I decided to start investing in ETF dividends, and I've been investing in them ever since, because with that you get an umbrella of companies under one stock. I mean, what I normally invest in are technology, real estate, medical, vaccines, diseases. That's what I usually invest in with my stocks, and it's more diverse. Now, a lot of people may say, this is not that diverse, but it's much diverse than individual stocks when you only can buy one company. Where here you can buy a company that has an umbrella of different companies underneath. So if one goes down, another one can go up. So you're more have more of a safety net than just investing in individual stocks. So that's what turned me off the individual stocks. And then with dividends, I was just thinking to myself, I know I can make even more off of dividends, but what kind of dividends can I actually invest in? So once I started learning about ETFs, I never went back to individual stocks or other dividend companies that did not were not under ETFs, because with ETFs, it's much cheaper to maintain your account. Two, you have an umbrella of companies under one stock. And then three, they pay you a dividend. So all of that is a win-win. And the dividend, they also pay you when it goes up. They also pay you when it goes down. Now, once I started getting into ETFs, then I started realizing that, you know what, they have three types of payments when they give you this dividend. They can pay you monthly, they can pay you quarterly, or they can pay you annually. And then I started realizing that when I used to wait into annually, let me give you a perfect example. I had a stock, an ETF stock, that was going to pay me $100,000 in 1 year annual. But what they did a short sale on me, which they sold the company off the stock and only ended up getting a few $1,000s out of the stock. So ever since then, I stopped buying dividends that paid yearly. And then quarterly, even though they will pay you a certain amount quarterly, but it wasn't more than what I would be getting monthly off the stocks I had. So I sold my quarterly, and then ever since then I just been investing in stocks that pay you monthly. Now, the dividend can change depending on how the stock market is. You know, if it's down, then they may pay you a little bit less than what you're accustomed to with your dividend, but they do pay you monthly, no matter what. And then what's so good about it, the fourth thing, okay, because I mentioned lower fees to maintain the account. What else? Dividends, and then also many companies all under one umbrella. The fourth thing is that you can use DRIP. Now, DRIP is where you can take that money that you get paid monthly and reinvest into your companies. So it's being reinvested back in those companies you already invest in each month. And that leads to the fifth thing, compound interest. So over time, at the end of the year, you'll get paid a certain amount, and then that next year you'll double that, and then you'll triple it the other year. So compound interest is just going to continue to grow and grow and grow. As long as you leave it in there. If you just decide not to pay anything else into your account, then you'll be able to actually double that. But if you continue to pay in, you're going to be making even more money in your account. So that's why I decided to start investing in ETF dividend stocks, and I've been doing that ever since, and I've been investing for almost 13 years. Now, when it comes to a broker account, Robinhood is very easy to use. I tried to sign up, but I heard not too long ago, a couple of weeks, that individuals ended up losing money out of their account due to a glitch. So I never ended up putting any money in that account. So I just have that just to get an idea how go about signing up to Robinhood. And then you have Vanguard. Now, I was going to invest in Vanguard, but I started reading some reviews about Vanguard, and many other times in Vanguard they said that many people could not get their money out when they needed it. So I don't know if that's true or not, but I read too many reviews on that, so I didn't sign up to Vanguard. And then I'm hearing people talk about Webull. Now, I'm going to get to that in a minute, but what I invest, my broker account is E-Trade, and I've invested in that for about 12, 13 years. And what's good about it is very easy to navigate throughout the program. The platform so it's user friendly. If you have an issue, you can not just call someone up, but you can also chat with them online. I had some situation where someone ended up hacking my account, and they gave me like some thing where it could cause people not to be able to see information from my account, so they wouldn't be able to hack back into it. So they're very helpful, and I've been with them ever since. Now I hear this new thing about Webull, and I'm just noticing that a lot of people are trying to push that out to the masses, but I'm realizing that the reason why they're probably pushing out is because they get a little kickback. Now they say that you can get $100 to almost $1,400 in stock, but what kind of stock is it? You know, they never mention what kind of stock it is. I mean, is it really that valuable? Even if it's $1,400, what is it going to do for you? What kind of stock is it? So I don't know if that's a reputable source to put your money in, but I see they're trying to push it, but they're trying to push it because they know they're going to get something in return for getting you to sign up and putting down that you got it from this individual YouTuber, right? So that is the reason why I did the last video on the 3 ETFs that I have, and that's all I have. Only 3 companies with many 3 stocks with many companies underneath those particular stocks. That's all I have. I don't have 20, 30 different stocks, individual stocks that I invest in. At one point when I first started, I did that, but I no longer do that because it was just too much to manage. Now 3, 4 is enough for me. Now the reason why I did that video was to share with you that you don't have to save up $100,000, $200,000 in order to get $8, $9, $10, $11, $12,000 each year. You can actually invest half of that and still get the same results. So I mean, it's just that people just need to do more research and finding out what exactly you need to invest in order to make a good return. I think what the problem is that, and I'm just my opinion, I don't know how everyone else feels about this, but I just noticed that I'm just seeing too many people trying to get people to invest in the same companies over and over again. And you know, I can't really say too much about that because at one point I was doing that. I was actually listening to those individuals who were pushing out certain companies, and I'm just not really questioning it. I did very little research and bought into those companies, and now, but these are valued companies. I mean, but what the return was not something that was substantial to me. I wanted something a little bit more. You know, I wanted more like a mortgage payment each month, or you know, almost like having a second, third job, right? That's what I was looking for. I wasn't looking for 30 payments of $2 or $4, you know, and sitting here and getting excited in front of the video, in front of the camera and video, and trying to get you excited and try to get you to subscribe to my channel. But in reality, I'm not really making that much, but I'm putting so much into it to get very little out of it. My idea of investing is putting little in and getting more out of it. You see, that's how my mentality is. It's not to buy high. Some people may tell you, oh, you know, the prices doesn't really matter. It's the valuation. But I had many companies that were in good valuation. I had Apple, I had Microsoft, I had Coca-Cola, all right, I had Citibank, I had Bank of America, I had Verizon, I had AT&T, okay, and the list goes on. I had all those companies that they push out to you and tell you to buy, and you know, I pretty much bought into it. And then once I start buying this company, I started doing my research and you know, finding about the percentage of the yield and how much it pays in dividends. And I was like, you know what, I think I'm gonna do a little bit more research and find out where I can actually make a profit, because way it looks right now, it's like they're making more of a profit, and I'm just sitting in having this 20-30 stocks and just sitting with it as a nostalgia to these companies that are idolized here in America. I had to retrain myself and rethink the way I thought, and I said, you know what, to this day forward, I'm going to be investing in things that actually going to give me a real good return on my money. So ever since then, I've just been investing in ETFs, and I'm going to continue doing that, you know, as long as I can invest. So if you have any questions, any concerns, make sure to put a comment below. Now, if you like this content and you want to see new content, just make sure to hit that like bell. And one last thing, if you enjoyed this video, become a subscriber if you're not already. So until then, have a great day. Until next time, out.